Over the last couple of months, Bitmine Immersion Technologies has been an absolute bloodbath. The stock BMNR is down a staggering 52%. Retail investors are dumping shares by the millions. And if you look online, everyone's screaming that it's over. The panic is absolutely real, but is it justified? Today, we're going to dig in and figure out if this crash is a warning sign or maybe one of the biggest opportunities in the market right now. Okay, let's just be real about the numbers here. Look at this. Back in November, Bitmine was cruising at over $54 a share. Fast forward to today, and it's barely holding on in the mid-20s. That's not just a dip, it's a brutal collapse that has absolutely torched portfolios and shaken people's confidence to the core. So, this is the big question, right? What on earth could cause this level of panic? Was there some fatal flaw discovered in the company? Or is something else going on behind the scenes? Let's follow the clues. And here it is. This was the trigger. A report from Investing Pro, which is basically an algorithm, flagged the stock as significantly overvalued. It pointed to things like negative EBD, a measure of profit, and said the price was just disconnected from reality. And that one headline, that's all it took for the floodgates to open and the panic selling to begin. But this right here points to the huge mistake that the algorithm and all the sellers were making. You see, they were judging Bitmine like a normal software company using metrics like PE ratios. But Bitmine isn't just a software company anymore. It's basically a digital treasury. And you don't value a treasury based on its quarterly earnings. You value it based on the assets it holds and how rare those assets are. They were using a completely wrong playbook. So, and this is the most important part, if retail investors were selling in a panic based on the wrong information, who was on the other side of that trade? It's time to ignore the noise and start following the smart money. Let's pull up the institutional filings. During this massive sell-off, did the big players run for the hills? Not quite. BlackRock, one of the biggest asset managers on the planet, didn't sell a single share. They held their position of 3.4 million shares rock solid. But the real story, the smoking gun, comes from one of the most cautious, buttoned-up banks on Wall Street. 6,600%. What in the world does a number like that mean when there's blood in the streets? It means that while everyday investors were hitting the sell button as fast as they could, Morgan Stanley increased its position in Bitmine by 6,600%. They didn't just buy the dip, they backed up the truck. This is just a massive disconnect between Main Street fear and Wall Street greed. But here's the thing about those Wall Street filings. They're old news by the time we see them. They tell you what happened weeks ago. What if we could see what was happening right now? Well, we could by looking at the on-chain data. We can do this because Bitmine is what you might call a crypto equity. We don't have to wait 3 months for some dusty SEC report to see what they're up to. We can literally watch their wallets on the blockchain in real time. It's an insane level of transparency. And what are those wallets telling us? Well, they're telling a story that's worth $150 million. That's right. At the absolute peak of the fear, when everyone was freaking out, data shows that Bitmine's own wallets took in almost 50,000 Ethereum. At today's prices, that's a $150 million bet on themselves. And this isn't just us connecting dots on the blockchain. The chairman, Tom Lee, came right out and confirmed it. He said they were speeding up their buying. When a company's leadership is aggressively buying their main asset while the stock is getting hammered, that's what you call extreme conviction. They see fear and they're buying it. All of this begs one massive question. Why now? Why this insane rush to buy in December of 2025? The answer, it turns out, lies in a single huge event that's just around the corner. A catalyst that could change the game for Ethereum entirely. The timeline here is everything. All of this heavy aggressive buying is happening just weeks before the Ethereum network gets a massive upgrade called Fusaka in early 2026. This is no coincidence, folks. This is a calculated race to stack up as much ETH as they possibly can before that upgrade hits. So what the heck is Fusaka? You don't need to be a computer scientist to get it. It boils down to two really simple but powerful things. First, it's going to make using the Ethereum ecosystem way cheaper, which should drive a ton of new users and demand. And second, it increases the rate that ETH is burned or just removed from circulation forever, making it a scarcer asset. It's just simple economics. Demand goes way up, supply goes way down. Now, all of this aggressive buying, it's all part of a much bigger, much more ambitious plan. It's an end game that the company itself has an aim for, the alchemy of 5%. The company has been crystal clear about its goal. It's not some boring corporate objective like beating earnings by a few cents. No, their mission is to acquire and hold 5% of all the Ethereum in existence. And you can see from this chart, they are well on their way. They already have over 3.7 million ETH, which puts them way past the halfway point. Just think about that. If one public company can pull this off, they could effectively become a central player for the financial layer of the internet, all while raking in hundreds of millions a year just from staking rewards. You know, if this whole playbook sounds familiar, it should. We've seen this movie before with MicroStrategy in Bitcoin. The market said they were crazy. The stock was all over the place, but in the end, the people who held on were rewarded like crazy. Bitmine is running that exact same playbook, but with a huge advantage. Their Ethereum actually earns a yield through staking. It's the same strategy, but on steroids. Okay, so let's wrap this all up. Let's put the fear on one side of the scale and the data on the other and see where we land with our final verdict. All right, in the bear corner, what do we have? We have one algorithm that was using the wrong metrics, which kicked off a bunch of retail panic and bad headlines. That's it. In the bull corner, we have Morgan Stanley boosting its stake by 6,600%. BlackRock not selling a share, the company itself dropping $150 million. A huge network upgrade just weeks away, and a clear vision to own 5% of the asset. The weight of the evidence here, it seems pretty one-sided. And really, this all boils down to a timeless truth about the markets, doesn't it? This sell-off wasn't really about Bitmine's strategy. It was simply a massive transfer of wealth from the impatient to the patient, from the hands of the fearful into the hands of the informed. So in the end, how you see all this really depends on what you believe about the future. If you believe that finance is moving on-chain and that Ethereum is going to be a massive part of that new world, then everything we just looked at suggests this 52% drop, well, it wasn't a crash. It was a gift. Thank you for watching. Turn on your notification to get more timely update on crypto.